let's move on. Let's talk about some other stocks then that are going to be in focus today. Prakash Diwan joins us to help us out with some quick fundamental analysis. Hi, Prakash. Good morning. Let's talk about the big boy, SBI Cards numbers. It appeared it was marred by some one-offs with regard to the employee cost out there. But how would you view the stock at current prices?
Good morning, Nigel. So I think it's quite a few things that are not working for this particular name. And generally, given the fact that unsecured loans is under a little bit of a scanner of sorts or questionable, metrics that kind of RBI's, played out in terms of, or has announced to the street that this is something which will be watching very closely. Cards will, of course, be a problem. But if you look at, you'd rather focus on SBI, and that's also something where we're seeing a very clear trend, which is some large banks are grappling with in terms of compression on margins. And my sense is this would probably also reflect in the March quarter. But having said that, it's also going to be a very, very simple opportunity, big opportunity for people to buy into SBI at this point in time who don't have it in their long-term portfolios, because from a longer-term valuation perspective and the kind of growth opportunity that it sits on, they will be able to revive things very quickly as things improve on the credit side and on the cost of deposit side. So we've seen that happen to some of the largest banks, whereas the mid-sized banks have got away with a little bit of an easier set of metrics. But my sense is SBI, if it gives you that dip, is probably going to be the last call to buy for the next 2 years, and then expect a very good outperformance relative to market, relative to other banks as well.
Well, the question really is, what do you do with Tata Motors, right, Prakash? Spectacular numbers, but the stock trajectory has also been equally good. I mean, it's doubled in the last 1 year. Do you think the risk-reward has become a bit unfavorable now, or is there more upsides?
Good morning, Sonia. I don't think so. There's any let-up in terms of the opportunity within Tata Motors. Remember one thing, and we spoke about this some time back, that I was expecting Tata Motors to report a very healthy number. And what's changed? What's changed is the JLR margins, which is the big elephant in the room in terms of what makes a big difference, what moves the needle for the company. Even the domestic market, if you see, except for the CV side, most of their PV launches, most of the PV expansion is happening at in a way that the margins will only improve. And with the price points coming down, Sonia, what happens is that your ability to pass on the fixed costs of the EV platform to each on a per vehicle basis starts kind of improving. And if that were to happen, you can imagine you have JLR margins coming back, you have coming into such a healthy state, you have the domestic margins, and this deleveraging thing would probably happen much earlier than what they've indicated. I mean, they've talked about FY25 end. My sense is middle of FY25, you'll probably start seeing the impact of that. So net cash, coming back into the books, it will give them a huge opportunity to kind of grow at a faster pace. So I think it's still got enough legs. I know the stock has run up, it's doubled in the last 1 year, more than that. But you still probably have the best bet in terms of visibility of earnings going forward from Tata Motors. So I had spoken about, at 700, that this is something which will give you 30-40% of an upside. I think it still holds true. You'll probably have a re-rating, and of course, the PE expansion will also follow.
Prakash, hi, morning. This entire travel theme is in sharp focus again, right? GMR, for example, rallied up some 8% on Friday. But then, not GMR, I want your thoughts on Interglobe. Indigo, which reported numbers. And it's once again, they've beaten expectations, and it looks like a pretty good set overall. What's the best way to get exposure? There aren't very many options, right? I mean, there's, of course, the Adani Airports business, but that's part of the Adani Enterprises listed entity. There is GMR, there is Interglobe, SpiceJet, who knows? What are your thoughts here?
Good morning, Prashant. So, first and foremost, what Indigo has reported, or what Interglobe has reported, is not much surprising. If you've been buying tickets for the last 2-3 months, you would realize what's led to this, healthy revenue, healthy beat on margins, profitability, all of that. What they will probably start doing is utilizing this buoyancy in their revenues and profit margins to actually deleverage more. And that is something which the market will definitely like, because that makes them much more competitively, better place in terms of a war chest. And remember, this whole shortage of aircraft supplies is actually turning out to be a very good benefit for them, while they themselves are impacted to a large extent in terms of their plans to expand. But it's inhibiting Air India and Vistara to grow as fast, which was the only threat that we perceived. I don't think from the airlines you would have any other choice. SpiceJet is still not kind of standing up on its feet and ready to run. So Interglobe does offer a good opportunity. Of course, the upside will probably be more limited as compared to what it used to be when it was around 24, 25, 2600 zones. But the way to play this entire theme, Prashant, is going to be there are a lot of allied services around airports, which you could look at. I mean, I know I'll just give you a couple of names, not that those are recommendations, but if you look at the way the DreamWorks expansion is happening, the network is expanding. Of course, they've compromised a lot on margins. They've not been able to kind of bring those things back up. But you look at, there's a company called Updater Services, very niche business. Of course, it does more than just airports. It supplies a lot of staffing services to airports. The number of airports that they're already present at and the way it's growing, it could be a very different dynamic. So I would believe, and by the way, it's not even very expensive as compared to what it was available at the time of the IPO. So this is one of those ignored IPO names from last year. You could probably look at that in a very different way. And if Indigo is growing, if Vistara is growing, and if everything else is flying high, there's got to be some some cascade effect on some of these vendors. So that's the way to play. But I would still buy Indigo, at least for the next 2 quarters. I don't see any issues till the competition starts intensifying with the supplies coming.